Welcome to our midweek Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. There's the Aussie US dollar. Not a whole lot has changed there. You did eclipse pretty good resistance there. You shifted that secondary, that long-term secondary pattern bullish actually, but guess what? You're just below primary pattern resistance. So Aussie's done a good job. You had a big rally, big counter trend move. You stretched it all the way to primary, well, nearly to primary resistance. It looks like you're starting to fade away here. You had a little bit of a shooting star there. So we think that, yeah, it's been a good run for the Aussie. We especially like this area down here that it bottomed in. We think you have long-term value there, but at the same time, we think that you'll probably turn lower against that resistance and you'll have a resumption of the bear market there. Not quite out of the woods there. The primary pattern, that's a long-term pattern. It's not very often you get a shot at trading against it, or I should say positioning yourself against that long-term resistance in line with that long-term pattern. So that's a pretty cool event. We're going to watch that, and it's going to be interesting how you're seeing all of the markets kind of dovetailing together here. There's no doubt about it that markets are correlated to each other just as economies are, etc. So, you know, I'm seeing a bit of a theme here with these big counter trend moves we've seen into 2016, yet they haven't been big enough to reverse those all important primary patterns. So stay tuned. Let's see what we see in the other markets, and let's see what type of picture these markets are drawing for us. And myself, like so many analysts out there, big believers that the pattern on the chart, the price pattern on the chart, is absolutely a reflection of underlying fundamentals. This chart's telling me, hey, you had, short term things are improving there. Long term overall, though, you're still battling pretty strong long term headwinds in the Aussie. Next market, we'll take a look at dollar Swiss. I love this market from a long-term standpoint. I took the opportunity myself to add to long-term long positions on this break. Here you see I put a shorter-term pattern in there. To me, here's your primary pattern in green. Then another secondary pattern. Sure, you had short-term kind of sluggish, trying to make headway here, but the long-term you see that the bull pattern, the green pattern there. And to me, that's unlikely to change. I've said it before. If I love it, if I like it at 98, I love it at 96. I'm ecstatic at a shot at buying it in the 95 handle. Here's the dollar Swiss. Here's your monthly chart, and this is why. I mean, look at all the room on the upside, and the reason for this, the underlying reason for my overall bullishness is the U.S. economy is going to lead the way here as the global economy picks up, and the reason for that was the U.S. was the first to implement quantitative easing, the idea of using interest rates to the economy's advantage. The U.S. did it. Europe was a little slow to catch on to it. Now Europe's doing it. Certainly the Japanese did it in a big way also, but it was the U.S. that were the first to do it, and we feel that's why the U.S. economy has been the strongest, and it's going to continue to be. And with springtime just around the corner here in the U.S., in the U.S. Midwest and in the East Coast and the West of the United States, we think things are about to pick up big time from a business standpoint, and we think this is the time to be accumulating dollars. Back to the daily chart of the dollar Swiss, and this chart, that's what you're doing. If you're buying it, you're buying U.S. dollars, you're selling it against the Swiss. We like that idea. Next market, the dollar index. Dollar index, similar chart. You see the long-term pattern there. The green box, that's a bull market. You're really testing it. You're really pressing the bottom there. Look, you got below resistance. Here's the thing, though. I'd have to pop out to a weekly chart. From a technician standpoint, if I had a second close below that, there's the bull market in the dollar. You see that massive bull run up, and then it says you have a sideways market. That's bullish overall. Very shallow retracement in here, but back to that level, you only had one close above. If you got two, you only had one close below that. If you had two closes below it, that may be cause for concern. But overall, the big picture, it's a bull. Next market, the euro. Great looking chart in the euro. Here's the daily chart, the big picture. The euro loves double tops. I can tell you that. Remember the great double top in the euro at 160. And then again, you had a large double top on the way down, I think upwards of 130. Now, what do you have here? Look, you had a double top. Well, similar to a double top here. And then look at the beautiful double top there. By the way, that red line, that's pretty significant resistance. That's secondary resistance. That's twice this market failed at it. Well, it hadn't failed at it yet, right? You could still take that out, and we're watching that closely. You see that little yellow line, very significant level right there? That's what we call well, that is the low of the highest closing candle. You always want to watch that. You want to track the low of the highest closing candle, because if you get below that line, that's what we call a change of direction. See what happened here when you back in Feb when you got below that line, bam, you had a pretty big down move. So we're watching that level pretty closely here. And if you think back, the Aussie just below, top it out just below resistance, and likewise the dollar Swiss starting to bottom out now on significant support. You're seeing a pattern here where the short-term patterns, they broke, they shifted, but those long-term patterns, sure, they're bending a little bit, but if they hold, that's going to mean a big move, and we feel that it's going to be down for the euro, up for the dollar. So watching this significant level in the euro there, the low at 112.05 level, significant level. You get a daily close below that. That'll very definitely be a sell signal for us as a position trader also. So potential sell signal on a close below there in the euro. Let's watch that closely. The U.S. stock market, I don't think we need to cover it. Stock market out of the woods. You had a pretty nice rally there. You took out significant resistance. So we think U.S. The bull market in the U.S. stock is back on track. No need to cover that. Take a look at the gold market. As always, a bit of a leading indicator. It certainly led on the way up. It just shot through there. You took out resistance. You took out a lot of shorts along the way, no doubt about it. Those shorter term shorts, that's why leverage can be a tricky thing. That's why I believe you need to have a core cash position in a market and just forget about it. Have it in your back pocket. Don't look at it. But when you get to significant levels like this, that's the time to consider using the leverage. And look at that. Look at how you're seeing that distribution there. That back and forth price action. This is a daily chart in the gold, but look at how wicked those candles are. Basically, the market's closing right where it's opening, yet you're having big moves either way. So that's definitely a distribution on the chart. So big move in the gold here. Let me go out to a weekly chart and I'll show you what we're looking at. Essentially, there's your primary pattern down in the gold. Here's your long-term or grand pattern down. Here's your primary pattern. Still down. All you did is you got to the top of that channel, and you're at significant resistance right here. That's the weekly. Now let me drop down to a more tradable chart, a 4-hour chart, and look at this beautiful head and shoulders you have here. Left shoulder, head, right shoulder, and guess where you stop? Look at that, right at the 2/3 level. So very significant support level right there. We're watching that closely too. We think if you spill below that level, that very definitely will spell out a long-term sell signal to take long-term short positions in the gold market. Last market we're going to take a look at will be 10-year interest rates in the U.S. And this is really the crux of it. This is why we're so bulled up long-term. Here, let me go out to a weekly chart. You want to scrunch up that chart. You want to get as much information on it as you can. And there you're looking at the bear market that has been U.S. Here's the bear market in interest rates, and that's just not in the U.S. That's been globally as interest rates go down. The first signal of a normalization of economies will be that interest rates start to pick up a little bit, and we're not calling for a roaring bull market here by any means as interest rates shoot back up to where they were in 2008. I don't think you'll see that at all. I think you have the bottom in place, and I think you'll have just a slow grind higher here. But that's going to be your clearest signal yet of green shoots in the global economy, particularly in the U.S. And as interest rates creep higher here, as you reverse this long-term, as you get a sea change move here, a reversal of that long-term downtrend in interest rates, and interest rates start to pick up a little bit as the Federal Reserve allows that to happen, that's definitely going to be dollar bullish. So that's why we feel long-term you got another big leg up in the U.S. dollar. Thank you so much for attending. Good to see you. We had the weekend off. It was nice to get away. A little bit of a vacation, but we had to pop in here and give you the midweek report. Thank you so much, and we'll see you next week.